Welcome everyone to the Tradimo live webinar. Thank you for coming. And before we get going, I'm just going to check if the sound is all okay. Yeah, it's all fine. Today, just like last week, we have Viktor Neustroev, a trader and educator here, who will be holding the second of his three-part webinar series. We called it the 2016 Year-End Volatility Webinars. And last webinar, we covered what the Trump presidency and looming Fed rate hike could mean for the markets, and in particular the US dollar going forward. Today, we have a more hands-on webinar ahead on the topic how to trade the news. And Victor will show you how to find tradable patterns after news releases, what news are important, how to collect data and identify market conditions and when to enter market. He has been trading the market since 2003, and he's active in the FX commodity space. But his true passion is options. And if you'd like to find out how he trades, you'll find the links to his courses below the video in the description section. This webinar was brought to you by Trade360, the crowd trading broker. Trade360 has revolutionized the concept of online trading with the introduction of crowd trading, a unique, technologically advanced approach to currency pairs, commodities, stocks, CFDs, and indices. Trade360 offers up to $5,000 deposit bonus for first-time depositors. So for more information and to open an account, a link in the description below. And now, without further ado, it's my pleasure to welcome our guest speaker for the second time. Viktor, over to you.
Okay, thank you, Peter. Hello, everyone. Thank you for joining this webinar, and let me introduce myself. My name is Viktor Neustroev, and as Peter said, I'm an option trader and commodity market analyst. I specialize on agricultural markets because I consider them to be more transparent. Agricultural markets dynamics usually depends on supply and demand focused. That's why I trade them. And this is my second webinar on Tradimo. And today we will be speaking about news trading strategy. Of course, there are a lot of ways to trade news, but I will try to explain you how to trade the market after an important event release. To be precise, not straight after the release, but 1 to 15 minutes later, when the market comes down. And our task will be to recognize a certain trading pattern and to hope that it will repeat next time. Now I'm going to share my screen. And first we will start to talk about advantages and disadvantages of using the strategy that I suggest. Of course, trading news can be different. I have already said about it, and you may open a trade just in time of a certain news release. But as for me, it seems too hard. When the market is turbulent, it's very difficult task to catch the price. If you try to do so, you may notice that it's impossible to open a trade at the price you want. There always is a slippage. And of course, it reduces your strategy profitability. If we speak about the strategy you're going to learn in this webinar, there is no need to open a trade in time of the news release. That's why I consider it to be the most important advantage of this strategy. You have to open a trade a few minutes after the release, when the market usually stops to fluctuate. The second advantage is that it's easy to define if there is a good chance to enter the market. I will provide you a strict algorithm how to identify that now it's a good situation to open a trade in a certain market. And the last advantage is that this kind of trading doesn't require much time. You need to be in front of your monitor just 5 minutes before the release and 30 minutes after the release. And of course, not every day. Okay, the main disadvantage of this strategy is that trades are rare. Just a few times a week, depending on markets you trade and, of course, the number of events that you cover. Actually, this is not a disadvantage for me at all, because I prefer strategies that trade rare, but strategies with a high profit factor. But of course, I know that some traders prefer high frequency trade. What I want you to know is that you don't have to trade if today there is no news in your calendar. Okay, I see that now you have basic view if this strategy is suitable to you or not. It depends on your trading style. I hope it is suitable because, in my opinion, it is going to be the best news trading strategy, which can bring you money nowadays. And now we can start to speak about important market releases, which you should just know. When you trade forex, you should know which data to look out for, what it means, and how to trade it. The first important market events is central bank rate decision. You may know that each month the various central banks of the world meet to decide whether to leave rates unchanged, raise rates, or lower rates. And the outcome of this decision is extremely important to the currency of the economy, and of course to traders. An increase in rates is generally seen as bullish for the currency, and a decrease in rates is generally bearish. As for unchanged decision, it can be either bullish or bearish, depending on the current economic conditions. Usually, central banks leave the rate unchanged. What else? Within rate decision, you should also take a look at minutes. The minutes give a full picture if the central bank is hawkish about the inflationary outlook for the economy. And in this case, the markets see a higher possibility of rate increase. And of course, this is positive for a certain currency. And some of the best trades you can make come from rate decisions. For example, since the ECB cut the Eurozone rate to 0.05% in September 14, EURUSD has fallen by over 2,000 pips. You may see this at this chart. The next important news is GDP. You may know that the gross domestic product is an important indicator of economic health in a certain country. When GDP falls below market expectations, currency values tend to fall, and when GDP outdoes expectations, currency tends to rise. And here I have an example for you. Uh, when Japan's GDP shockingly shrunk 1 and 6% in November 2014, the yen fell sharply against the dollar because uh, traders anticipated further central bank intervention. The next important release is CPI, which is Consumer Price Index. This is the most widely used inflation measure. And of course, you know that this index gives information about the historical average prices paid by consumers for a basket of market goods, and it highlights whether the same goods are costing more or less for consumers. For example, here in November 2014, Canadian CPI beat market expectations of 2% and came in at 2 and 3%, and Canadian dollars subsequently traded up to a 6-year high against the Japanese yen. Here it is. And the next important news release that you should know about is unemployment rate. The unemployment rate of a country is crucial to markets because it gives its importance to central banks as an indicator of the health of an economy. You should also pay more attention to the two most important labor statistics, which are US ADP and NFP figures. They are released each month, and NFP takes the prime position. I'm going to tell you more about non-farm payroll statistics later in this webinar. Moreover, we are going to create a trading pattern based on its statistics. And as for ADP data, it is considered an important predictive tool for NFP because it is released beforehand. Okay, what else? The next news that you should take into your account is FOMC meeting. FOMC is America's Federal Open Market Committee, and it releases the statement, which is regarded by traders looking for clues as how the central bank will behave in future. And of course, FOMC meetings can cause huge market volatility. Moreover, we can learn there about any changes in monetary policy, for example, such an announcement of QE. And of course, this is extremely important to currency traders. For example, since the ECB announced their latest QE on January 22nd of 2015, Euro USD has fallen by over 600 pips. the key thing with all economic indicators and news releases is not just what the actual release means, but how the market anticipates the release and how the market subsequently reacts to it. And this is where the trading opportunities are created. I would like you to notice that we can't define all the impact of a certain news release to a currency pair, because some of releases can't be measured by numbers. However, sometimes we can say exactly whether these releases are negative or positive. What I want you to learn from this webinar is that you should pay much attention to these news releases. Make research yourself and find your own trading pattern. And I highly recommend to expand the number of releases you trade to diversify your risks. Okay, and now I would like to show you where to find Forex calendar and how to detect that this particular news is important. Okay, there are a lot of calendars that I like. For example, you may visit trade360.com. Click here, cloud trading and economic calendar. Here is a list of all events which may have an impact on Forex market or on a certain currency pair. If I'm not mistaken, current time zone is GMT. And there are a lot of events, but our task is to choose only those which have a high impact on the market. That's why I'm going to apply a filter. And of course, you should trade only liquid pairs. That's why I suggest to filter these events, selecting only countries and currency that you trade. Okay, we click Known. Then we choose Australia, United Kingdom, Canada, Europe, Germany, New Zealand, Japan, Switzerland, and United States. Okay, filter results. Okay, let me describe now what you will see after all the manipulation. The first column is time of a certain event, and here is the date of event. The next column is the name of the event. Now, for example, weekly crude oil stock. And here is the description of this event and some statistics. The next column is volatility, or we can call it impact. And we choose only events with which have a high impact on the market. I'll show you how to do it. Look here and here. Filter. It means that after publishing this news, the market usually moves upside or downside, but rapidly. You can also filter events to see only the most important and only that have an impact on markets that you trade. And three left columns are specific values of a certain indicator. And you see that this cell is empty because this event will happen in future. This column means focused, what market participants are waiting for this indicator to be. And the last is previous. Usually it's last month's value. And when you trade Forex, it's quite easy to find the calendar. But when you trade commodities such as corn, wheat, crude oil, or natural gas, there is no certain place, certain website where you can find all information and reports. And I also should mention that Trade 360 allows you to trade crude oil, natural gas, and corn. Now I'm going to show you where you can find relevant information about these markets and what reports you should pay attention to. Let's start from wheat and corn markets. This is a link to a calendar of events happening in this market. It's usda.gov. It's a link to the website of United States Agricultural Department. And you should click to agency reports to know if any reports are going to be published today. Here you can see a list of reports, but only few of them are really important for the market. And now I will demonstrate you which reports you should look at when you trade agricultural markets such as corn, for example. Okay, the most important report is called World Agricultural Supply and Demand Estimates Report. It is released on 10th of each month, plus or minus 3 days. This report has the most significant effect on the market because USDA publishes its forecast for ending stocks, production, net export, and consumption in the United States, and of course, world consumption. And the market reaction is very unpredictable, especially if you are not an expert in this market. The next report is crop progress. It is released every week on Monday from April to November because this is a growing period for most grains in the United States. And this report shows the quality of the crop, how many percent of the crop was planted or harvested, what quality it is, and what development stages the certain crop now is. And the next one is export sales. It is released every week on Thursdays. In this report, you will find export sales for previous week, for current and next marketing year. And the next is grain stocks, which usually releases quarterly by the end of each quarter. And it shows current stocks for the end of each quarter. The next is acreage. It releases once a year by the end of June, and it reflects information about actually planted area. And the last one is prospective plantings. It releases annually by the end of March, and it reflects farmers' intention what area to plant. How to use it? Every time you see any of these reports in the calendar, you should be ready for high volatile market. So that wait for market to go upside or downside. And the most profitable strategy for such situation is to open a trade in the same direction as market goes in the first few seconds after any of these reports release. And for every report you see a certain time it is going to be released. This is Eastern time, New York time. Don't forget about it. And now let's continue with crude oil and natural gas markets. And for these markets, the most important reports are weekly storage reports. And you should go to the website of US Energy Information Administration. It is eia.gov. Okay, for natural gas, you should click on weekly natural gas storage report. It is releases every Thursday on 10:30 a.m. and it shows an inventory of natural gas available in the United States. And for crude oil, we should click on weekly petroleum status report. It is usually released every week on Wednesday at 10:30 a.m. And we should monitor stocks of crude oil. And the most important indicator is commercial crude oil. If stock decreases, the market usually goes up. If stocks rise, the market moves downside. But such pattern takes place only if it's a significant withdrawal or significant replenishment. And of course, the same tendency works for a natural gas market. Okay, and now I'm going to teach you how to make a research, how to define what news are important, and how to identify the trading pattern. I created a template for Excel, and I'll let me show it for you. Here it is. And here is the name of the event. Today we are going to observe non-farm payrolls. And here you can see 4 different time frames: 1 minute, 5 minutes, 15 minutes, and 30 minutes. And you should fill in dates when this news was released. I recommend you to choose at least the last 10 dates to make your statistics more representative. And here you should fill in the prices: open, high, low, and close. And in these columns, you should insert the price difference between high and open, and in this column between low and open. To fill in this table, you should use any trading platform, and for its calendar, first what we should do is to open the Forex calendar. Here it is. As I remember, if you're speaking about non-farm payrolls, it releases every first Friday of every month. The first Friday was the 4th of November. Here it is, non-farm payrolls. So the first date is the 4th of November. And we should also fill in the first part of the table, the date, the actual and expected numbers, and the difference. Okay, let me check. The actual number is 161,000. Expected number is 175,000. From other sources, you may find that the focus was 174,000. Okay, and here is the difference. Minus 13,000. So you should find the last 10 dates or more. And the previous date was the 7th of October, and you can fill another line yourself, and so on. Fill this table. Then you can open your trading platform and try to complete all other columns. For example, I decided to find out how strong this news affect American dollar against Japanese yen. And this is a screenshot of this chart. This is American dollar against Japanese yen and one time frame. Here you can see open prices. Open is 102.996. High is 103.17. And low is the same as open price, and close is 103.11. Okay, let me fill in the table. Okay, the difference between high and open is 21 pips, and there is no difference between open and low. What you should do next, then you switch to a 5 time frame and do the same for all time frames. But and I should mention that open price is always the same. I don't want to waste your time, that's why I did everything the day before this webinar. Here it is. Now you see that all cells are filled in with numbers, and now it's time to find a pattern. How can we use these numbers? Okay, let me explain you. What you should understand by looking at this table. Of course, there are many conclusions that can be made, but I ask you to find the most reliable. And you may notice that every time when this indicator was positive, I mean positive for dollar and negative for yen, what means not only that actual number was higher than expected, but that first market reaction was to increase. And in this case, you will see that price always dropped in a period from 5 to 15 minutes. For example, here it was 103.115, and here it's only 103.110. These cases are marked with yellow in the table, and for example, you can look at this line at 4th of March. The difference was 47,000 working places, and the closing price for M5 was 114.1 and 2. And for M15, close price was 113 and 0.89, little bit lower. It can be easily described as overreaction of market participants. And you may see that the same situation happened again and again. Here, here and here, here and here, and here. And the only exclusion happened on 8th of July when the market skyrocketed in 1 minute because the difference between actual and expected numbers was too high. It was more than 112,000 of working places. But anyway, 1, 2, 3, 4, 5, 6, 7, 8. 8 profitable trades against 1 loss is what you haven't ever dreamed of, have you? And now I'm going to reveal you the whole strategy. Once you have completed your research and you have identified the releases and tradable, along with time periods from which you want to trade, you are ready to execute on the market. What you should do? You should wait for another news release. Let me show you this week. For example, non-farm payrolls is going to be released on December the 2nd, this Friday. And your task is to wait until release. Then you should estimate if the market reaction is positive. I mean, you should convince that the market increased in more than 20 pips in 1 minute. If so, then you wait for 5 minutes after the release, and you may open a short position. I mean, you may just sell. But please don't forget to close this trade in 15 minutes after the release. Let me show you a possible example. For example, here you see that okay, maybe this one is better. Here you see that the release was positive. The actual number is higher than expected, and the market reacted by increase. And it increased by 25 pips in 1 minute. Then we wait for 5 minutes, and here is closing price of 5 minutes candle. And here you should initiate a sell. So here you should sell. And you should wait just for 10 minutes. It will be 15 minutes after the release. And then you close this trade for the last price. And for example, in this trade, you could earn about 15 pips. And I believe if you will use this pattern, then you close most of your trades with a profit. This is how you can earn money trading just once a month. And of course, it's too rare, but you may use other news releases, collect statistics, and identify your own trading pattern. And actually, this is what I teach in my course about news trading on Tradimo. Let me show you. Here on learntradimo.com, you can find this course. It is called Trading News Using Binary Options, but it's not about binary options. It's about how to trade news. And it all depends on you, whether you would like to use binaries to get profits, or you can open a direct trade. Both ways are allowed, and I believe that both of them will bring you money. And what else? In this course, you can also find more statistics concerning other events. For example, I explain here how to trade durable goods and news releases. Okay, and now let's go back and check another reliable pattern. What if this news release is negative and the market reacts by decreasing? you may notice that every time it happens, the price decreased in a period from 1 minute to 30 minutes. And the only exclusion happened on 5th of February when price increased. Here you can see it was 116.69 after 1 minute, and it was 117 after 30 minutes. However, 6 profitable trades against 1 loss is a very good result. And you can use this strategy in another way. For example, you may sell in 1 minute after you see that market reacts moving downside, and you should close your position in 30 minutes after the release. This is how you can make money avoiding additional risk. Thank you for attention. This is all I wanted to tell you in this webinar. If you want to know more, you may contact me. If you have some questions, don't hesitate to ask them. Actually, I don't see here any questions. Peter, do you have anything to ask?
No, thank you. Would you like to wrap up the webinar?
To what?
Would you like to wrap up, finish the webinar, or is there something else you'd like to share?
Just one thing. Can we upload this template for our participants? So maybe somebody will watch this webinar on YouTube. Can we?
Yeah, sure. We can find a way, either uploading or we can send it out via email to whoever's interested.
Okay, so we will upload these statistics on Tradimo website, and your task will be to download and to use it yourself. The only thing I ask you is to add more dates here. For example, on the 2nd of December, you should add a date here to collect more statistics, and maybe you will find another reliable path. Okay, this is what I wanted to say. Now we can finish.
All right. Thank you, Viktor. I hope everyone enjoyed the webinar, and that you go ahead and at least on a demo account, give this strategy a try. And if you'd like to find out more about these concepts and deepen your knowledge about this news trading, just check out the course, the news trading with binary options course from Viktor. Thank you to Trade 360 for sponsoring the webinar. Again, if you'd like to try crowd trading, you can enjoy an up to $5,000 deposit bonus. Link is down below the video in the description box. Thank you again, and see you next week for the final part of this webinar series, where Viktor will share with you his trendline trading technique. Thank you. Bye-bye.
Thank you.